Welcome to Costco, the ultimate cart collision derby. Ah, Costco, on a Sunday afternoon where shopping carts become bumper cars, free samples fuel the masses, and finding a parking spot is a competitive sport. As you walk through those automatic doors waving your membership card like a VIP entering a private lounge, you're instantly immersed in a world full of oversized everything. My name is Arjun Ramakrishnan, and I am a junior at Lake Oswego High School in Lake Oswego, Oregon. I also have the pleasure of contributing to YIS as a member at large of the Student Advisory Board. I'd like to begin by thanking the Young Investor Society for the opportunity to present Costco Wholesale Corporation. Costco Wholesale Corporation, ticker symbol COST, is listed on the NASDAQ Stock Exchange. The company operates in the warehouse club sector and falls under the industry classification of retail stores. Based on my analysis, I have come up with a buy recommendation. As of March 15th, 2025, the stock price stands at $903.92, and my target price for the next 12 months is $1,314.77, reflecting a 45% expected upside. I also use the dividend discount model, or DDM, to supplement my valuation, which resulted in an expected $1,253.10 price per share, representing a 39% upside. However, before I get into the fine details of the pitch, let's talk about what Costco actually does. Costco was founded in 1983 and has grown into one of the largest wholesale retailers in the world. The company operates a membership-based warehouse model, offering high-quality products at low prices to consumers and businesses. Costco's business model is built on offering low prices on a limited selection of goods and services and focuses on building customer loyalty through its membership program. You remember that VIP card I mentioned earlier? That's the membership that gets you access into this exclusive lounge. Costco's business can be broken down into four segments: fresh foods, which is comprised of produce, meat, and baked goods; non-foods, which includes hard lines like appliances and soft lines like apparel; foods and sundries, which is made up of dry grocery items and other miscellaneous supplies; and finally, warehouse ancillary. These are services like gasoline and the food court that are part of the Costco warehouses themselves. I looked back at Costco's financial history and came up with compounded annual growth rate estimates for each of these segments based on the average values over the last 10 years. As you know, Costco is in retail, so these CAGRs are pretty much steady every year. However, I noticed that in 2020 and 2021, there were massive variations due to COVID-19. You remember when Costco ran out of toilet paper? Because of that, I excluded those 2 years from the average since they were skewing the data. Let's look at Costco's competitive positioning now. Costco operates in the highly competitive retail and wholesale industry with key competitors such as Walmart, Sam's Club, Target, and Kroger. However, Costco's business model gives it an edge, and it substantially exceeds the average of the entire retail industry on pretty much every metric, as demonstrated by this table compiled from data provided by Yahoo Finance. As you can see, if you exclude Costco, the mean drops substantially. When performing a moat analysis, I noted that Costco benefited from three main factors: high stickiness due to their membership-based business model, low cost advantage due to their low merchandise markups that attract and retain customers, and intangible assets due to the value created by their Kirkland brand products. Using Porter's five forces, I analyzed Costco's market position as well. Competitive rivalry is higher given that Costco competes against retail giants like Walmart and Target. However, other forces like threat of substitutes and new entrants are much lower. Let's take a look at some growth drivers. Costco presents a strong investment due to significant opportunity for international expansion. Since each new warehouse typically achieves profitability within its first year of operation and then continues to add $260 million of revenue to the company, I predict that new international Costco locations will benefit the company substantially. Additionally, Costco's membership programs encourage consumer loyalty, and their high inventory turnover ratio indicates efficient inventory management. I expect all of these factors to contribute to growth in the years to come. Using a discounted cash flow analysis, I came up with a final target price per share for Costco Wholesale Corporation of $1,314.77. My recommendation largely hinges on the assumptions that averaging the growth rates of the past 10 years of Costco's financial history would yield accurate estimates for projecting future growth rates, and that Costco will experience success in its expansion efforts. Now, let me take a moment to explain my valuation process. So, here's how the sausage is made, or should I say, the $1.50 Costco hot dog. I'm going to go through this rather quickly since I know you already know how a DCF is done. First, I began with a 10-year look back at Costco's financial performance by segment, and then I calculated average growth rates across each segment to come up with compounded annual growth rate estimates. Using those growth rate estimates, I projected revenue out for each segment out 10 years into the future and aggregated them to get revenue estimates for the entire company. From there, using the same method, I projected the income statement and balance sheet numbers out for the next 10 years as well. And then I calculated free cash flows to the firm and discounted them back to present value using an estimated weighted average cost of capital of 7.28%. I reached this estimated WACC after looking at the long-term bond rate, equity market risk premium, and other important factors. After discounting back to present value, I calculated the terminal value and then arrived at an equity value per share of $1,314.77 per share. I also used a dividend discount model to supplement my valuation, and that's what you see on this slide. I took historical trends from Costco's dividend payouts and then used those trends to estimate a price per share of $1,253.10. Costco, like any business, faces risks. Costco is highly reliant on the performance of its US and Canadian operations as they make up approximately 87% of total revenue. And with political tension between the US and Canada mounting, it is possible that there could be an impact on performance in these regions. Costco is also dependent on the success of international expansions, and this is critical to my valuation. Failed expansion could cause losses. Finally, Costco is vulnerable to disruptions in merchandise receiving and distribution. However, as a highly competitive and strong player in the warehouse club industry, Costco is uniquely positioned to endure these risks and is still a worthy investment. Costco prioritizes ESG and CSR initiatives. They are committed to combating climate change with their renewable energy commitment, and they also offer wages above industry average and maintain a supplier code of conduct that prioritizes ethical business practices. They divert 78% of all waste from their landfills and have raised $459 million for charity through their Children's Miracle Network. They also focus on CSR, as women make up 43% of their workforce, while underrepresented minorities make up 44% of the workforce. Furthermore, Costco has outwardly committed to and embraced DEI in a time when DEI initiatives are under fire. 40% of Costco respondents agree that DEI is important to the brand, and 31% believe that Costco is ahead of its competitors in DEI initiatives. Where do I even begin discussing the multitude of ways AI has impacted Costco? Pretty much all of their operations use AI. For starters, have you ever noticed how different Costco locations stock different items based on the local demographics? That is part of the inventory demand forecasting powered by AI at Costco. On the supply side of the business, they are at the cutting edge of optimization using AI technologies. Remember when we were discussing growth drivers and I brought up Costco's high inventory ratio? Let me tell you, that number is 12.6x, which means that Costco turns over their entire inventory more than once a month. That is fueled by AI. In conclusion, my recommendation is a buy on Costco Wholesale Corporation with a target price of $1,314.77 per share. Finally, this is what I'd like you to take away. Costco is a great business with an exceptionally wide moat. Their ability to retain customers and turn over inventory at scale is unparalleled. Additionally, they are in a favorable position to expand internationally and dominate foreign markets. For all these reasons, I know that Costco will be a great investment. Thank you for your time.